Hello and welcome to another edition of Stock Watch. So as we end the trading week, we're hearing more and more news coming out of the earnings season. Very, very positive for American banks. And in focus, we've got Citigroup and Bank of America, which have both posted very strong quarters and beat analyst expectations. So Citigroup beat their expectations because with strong investment banking revenue and a bigger than expected release of loan loss reserves. So looking back yesterday with JP Morgan Chase, they've pretty much done exactly the same thing and expecting quite a big resurgence in 2021 and obviously 2022 that they won't have much losses on their loans that they've given out. The firm also said it was shuttering retail banking operations in 13 countries across Asia and Europe to focus more on wealth management outside the US. And this is one of the first big strategic moves from their new CEO, which came in February. The bank reported profit of $7.94 billion or $3.62 a share, and that exceeded $2.60 estimates of analysts. And Bank of America, like I was saying, also posted first strong quarter results. But the stock actually did slide yesterday as investors focus on the bank's COVID-19 related expenses and weakened expected net interest income and loan growth. So quite a big move in the market. You know, it's a bit funny when earnings season comes around and a lot of companies do have a high earnings report, but then their shares slide for some reason. So it's either usually that investors have already priced in the move, or like Bank of America, investors were focusing on other aspects. So earnings at Bank of America more than doubled from a year ago, coming in at 8.1 billion, up from 4 billion in last year's first quarter. So quite a significant jump above this COVID-related news, and we'll see if it keeps on going. So the last time I looked at Citigroup, we had this very big exponential push to the upside. We're eclipsing the Ichimoku cloud as well. But what we're seeing on the RSI at the moment, as you can see here, we've got bearish divergences. Now we're looking to see if we do get a bit more momentum, a bit more push on the price. Is there going to be yet another divergence to the downside? We'll have to wait and see about that. But at the moment, Citigroup are looking a little bit better than Bank of America. They did have a bit of a choppy session yesterday, but it's looking to probably start pushing higher above the recent peaks that we've been seeing. This is a slight false break, but still, I'm just looking roughly at the mid to high end of the $70 range. If we do see a slide in prices, then I'll be looking probably going towards the $70 range. And if we do start being immersed in the cloud, then probably more downside will ensue. And I'm just looking at the lower border of the Ichimoku cloud, which is giving me a nice support as well. So I'll just be looking at the next few trading sessions. If prices do start sliding slightly, then sell positions will be the way to go for myself. And we'll see what the outcomes are in the next few trading sessions. So just a quick look on Bank of America as well. So as you can see, this very sharp slide in the day. We'll go into intraday shortly. I just wanted to see more of a global aspect of the prices first. And as you can see, a little bit like Citibank on the RSI, a slight bearish divergence forming here. We'll just see if that comes into play anytime soon, as prices could start to wane further. Like I said, with earnings seasons coming in, it's a little bit of a surprise when such positive news can impact a company, and stock prices can fall. So just something to look out for, that not all news is always good news, even if it is positive in the headlines. And let's just take a look here. So what I'm looking at here at the moment is we're just precariously hovering above the top border of this Ichimoku cloud. We're just seeing if prices are going to start falling a little bit more, and then I'll be looking just to see what the next levels are here. We could put a Fibonacci in as well to see a retracement, but it's a little bit too dramatic at the moment. I'm just going to see what the next levels are for the stock price before we start falling a little bit further down. If we can obviously keep momentum outside of the top border of the Ichimoku cloud, then we could just keep seeing a little bit more of an upside growth. However, it's more likely at the moment that we're going to start seeing a little bit more of a fall to the downside. So just something to look out for. And if this bearish divergence kicks in, then we know where we're going and have a better direction. So that's all from the Stock Watch today. Thank you very much for joining me. If you have any comments or queries, as usual, please feel free to add them to the post, and I'll get back to you as soon as possible. Have a great trading day ahead, and bye for now.